As the world is increasingly run by artificial intelligence, a growing number of companies seek out algorithmic trading. Natalie Ehrlich has more in the next report.
Emotion, greed, arrogance. Imagine you could take the sin out of investing. Well, perhaps you can with the help of a machine.
A lot of times when people trade, they let their emotions and feelings get in the way. It might be a good idea sometimes, but usually not. And the computer doesn't do that. I mean, it has its rules and it only trades according to them.
Welcome to the world of algo trading. Instead of relying on a market trader, or even worse, the caricatures depicted in Hollywood films, in some cases, you can remove human intervention altogether. A pre-programmed algorithm decides what stocks to buy and what to sell. It's unfazed by market swings because, after all, it's based on math. A growing number of hedge funds, investment banks, and pension funds are turning to automated trading, as it's also called. We got the chance to sit down with i24, a financial startup that has innovated a self-learning algorithm based on artificial intelligence and machine learning. Dr. Lipa Rouitman, a PhD in chemistry from the Weizmann Institute, with 20 years of experience working in artificial intelligence, says the mathematical model that describes chaotic chemical processes found in nature is similar to the model of financial markets. He's so convinced of the similarity, he even created an algorithm that incorporates aspects of genetics.
It's used for very difficult processes where the exact rules are not known and even probably not existent, but it allows us to come up with pretty good approximation of what happens next in the market.
The algorithm offers 1,400 predictions per day for 6 time frames for the short, medium, and long term by identifying waves in the stock market to forecast its trajectory.
Our return in 2013 was 60% versus the 29% of the S&P 500. We were beating the S&P by 31%.